Welcome to Trading Nation. I'm Brian Sullivan. Let's welcome in by phone Julian Emanuel. He is UBS's U.S. Equity and Derivatives Strategy Head. Julian, it's a real pleasure to chat with you again here on Trading Nation. All these surveys keep coming out, how bullish, 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 bullish. You've been negative or concerned anyway about stocks for a while. Does this make you more so?
It definitely gives us a pause for reflection here, particularly in light of what, if you look at the overnight lows after the election, has been an 11.5% rally in the S&P 500, led by a 17.5% rally in financials. And when you think about these last 8 years of the bull market, and when you think about typical bull markets, it's very true that markets climb a wall of worry. And looking at these confidence measures, whether it's CEO confidence, small business optimism, consumer confidence, the fact that they're all spiking, while it's heartening in terms of what we think we can expect with regard to the economy, it isn't always a positive message for stock returns in the month ahead based on past history.
Okay, yeah, and it's, you know, we've seen that, but we've also never seen this kind of a situation, I guess, Julian, where we see such a reversal in administrations. You know, obviously, you can go back to Obama's first year or two, but that was during a crisis. So had all this other stuff going on. Do you think the market is getting it wrong?
The market isn't necessarily getting it wrong, Brian. The issue here is again, you know, the confidence turn is real. And very often, you know, when confidence turns as sharply as it has, you know, that can bleed into positive effects into the real economy, which is certainly what the expectation is going into 2017, along with the expectation for, you know, supportive legislative agenda from the incoming administration. The problem is that in terms of the market being a discounting mechanism, you know, you're really bumping up against valuations that are more typical of peaks in the market. And you're bumping up against, you know, expectations of the economy, which we think are closer to 2.8 to 2.9% growth, that just aren't likely, even if we get the stimulus that's been talked about over the last several months.
But do you think, though, in terms of valuations, that we could see this boost up in earnings, which would then obviously, you know, unless if prices stay the same or go down, shrink the valuation gap? Are you negative on earnings as well?
No, we're actually positive about earnings, and you know our view that they'll grow by 5.9% in 2017. If anything, given the potential for tax reform, has an upside bias to it, and so we're feeling fine there. It's just the issue is that when you look at what consensus is expecting on the order of 12.4% growth, that number bakes in a lot of impact from tax reform that may or may not actually be a 2017 issue, could well be a 2018 issue, and that's one of the things that gives us pause.
All right, before we let you go, give us a money-making idea, please, Julian.
Fantastic. So, well, from our point of view, while we like financials over the long term, it's really a story of a very embedded negative psychology going back to the financial crisis. We think they're going to pause in the short term. What we really prefer here are stocks that were actually down on the year in 2016. The laggards shall lead in the new year, and there's a lot to choose from, particularly in the beaten down areas of healthcare, certain consumer discretionary, and software stocks, which didn't participate as much in the post-election rally, given the concerns that high growth, high multiple stocks were being held back from the rise in interest rates. But we think there's room for those stocks to work in the early part of this year.
I like it, the forgotten software stocks. It might be an upcoming segment on CNBC as well. Julian Emanuel, thank you very much for joining us on Trading Nation. We appreciate it.
Thank you, Brian.
Folks, and thank you for tuning in. Check out all the other ones that we have done on this fine network. We'll see you soon.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.